to this computer.
Um,
Now we're
there we
good.
go. Perfect.
Okay,
Ugh.
so welcome everyone to the first time buyer event. As I said, this was supposed to be in person, but it's a webinar and we're going to make it work. I'm hoping that this actually is more convenient for you guys because you could be in your house, you could be on the road, you could be on your phone and still get the information. I'm realizing that this year the last couple of years have been very interesting, tough for a lot of people. But there are still people that still want to do something. They want to get into the market and they're not sure how, especially with the new way of how things are with the market. Confidence is low in terms of buying a property. Financing is a challenge. So I talked to Jerome. Jerome and I have done a bunch of deals over the years. And he's really, really good with first time buyers as well. And he does obviously move ups and investors as well. But we decided, you know what, let's do a webinar. So it's supposed to be a seminar in person, but let's do a webinar and discuss how to get in the market. What does a buying process look like? How do I get a down payment? And what does the whole thing look like? So let's get straight into it. I think we have about 12 people in here, so let's do it. Let me share my screen. Jerome, you have any questions at all or anything you want to add to what I'm saying?
No, I think we're good to go. Happy to be here and answer anyone's questions. So after Tristan goes, I'll get started. I'll go through the basics first, just kind of the process as a first-time home buyer, and then I think we're going to open it up for questions as well.
Dope. Awesome. Okay, so let me share my screen. Everybody can see my screen? Thumbs up.
Yeah.
Can you just Jerome, you can see it okay? Everything's okay there?
Yep. Yep.
The whole screen, or you can see just
I can.
just the
I think
presentation?
I can see the presentation. I think you can expand it further
Yeah. One second here.
to presentation mode.
Yeah, it should have been that's what it's supposed to be in right now, but hold on one second here. Gosh, such a rookie. This is embarrassing, you guys. It's such a rookie
It
at
was a
this. Oh my
last minute
goodness.
switch. It was a last minute switch. It's
What a
okay.
rookie. Come on. What's that, guys? Let me get that going for you. Okay, so we should be good.
But you're gonna start it
Same thing?
earlier.
Is that the same thing?
Yeah, but it started on my slide, so I think you're gonna want to start it earlier.
Yeah, yeah. But you could see the bottom
Oh,
of it
yeah.
too.
Yeah,
You
I
could
think
you
you
could
can
see the
even
bottom.
click
Okay, one
enter
moment.
full screen mode. You see that on your screen? Yeah.
Enter full screen mode.
Yeah, I think you gotta click that.
Okay, we're gonna do one more thing. Sorry, guys. What a One moment. Here, there we go. You can see that?
There you go. Perfect.
Okay. Okay, so how to actually buy your first home in 2026. As I said, like this is something that we've been, having conversations with clients, especially this year. We've done a few deals where they're first-time buyers, and after going through this process, they say, "Hey, you know what? This actually makes sense, and we can actually do this." And they did it. So we wanted to do this webinar here for you guys. A little bit about me. So my name is, of course, Tristian Clunis. Jerome is who I'm doing this great webinar with. I've been in the business for 14 years, so I've been selling real estate full time in the GTA for 14 years, and I specialize in first time buyers. I have the patience, of course, move up buyers, and also investors. And it's funny because a lot of the people started off as first time buyers, and then
Mhm.
quickly moved up to move up buyers, and then investors, and some of them just kind of started as investors with me. One of them is actually on the call, funny enough, that we're actively looking at investment properties because it is a great time to do so. Because I've been consistently ranking in the top 3% nationwide for realtors over the last couple of years, which is awesome. It's hard work because this has been the hardest. Last year was the hardest year we've seen in 30 years in terms of sales, and we have about 70 agents in the Greater Toronto area. So not a lot of people are selling, unfortunately. And I've guided clients through every type of market, right? Like, boom when things are going amazing, and then obviously when things are rough, which is how it looks right now. For depending on who you are, for sellers, not necessarily for buyers. So let me just go to the next one here. Okay, so This is kind of what recent clients have been saying. These are literally within the last few weeks, buyers that I've been working with. So they kind of like testimonials. The first one is great experience, great service, and a great help for a first-time homeowner. Um, Our agent made the experience easy and comprehensive. The treatment received made the process of buying a home easy and smooth. So that was a first time buyer couple that we worked with maybe a month or two ago. Jerome was actually on that
Yep.
deal as well, and it was you know, a challenge to say the least at first for them in terms of they didn't think they can do it. But once we
Hmm.
start going and we did the same presentation that we're doing today, within a couple weeks they bought a home. Like everything
Yep.
was done very, very quickly. This is another testimony. I kind of want to show you the contrast. This is a buyer and seller, a client of mine became a friend. He's been working with me since 2013. And he says, this is my fourth transaction using Tristan in a very competitive field. I trust Tristan to guide us in our real estate endeavors. He is more than a realtor and cares about what the client's needs are. And that is extremely important to me. I don't force. I have a buyer specifically on the call right now. She can, attest to this. I don't force anything. I will give you knowledge. I'll give you the information. But there's no such thing as like, you need to buy this or you should, I'll give you just my opinion with research. So I think that that's important when you're looking for a realtor. Sorry, one second here. So today's agenda, we're going to talk about understanding the market. We're going to kind of dive into numbers. I know some people may or may not be interested in knowing about specifics on the market, but I think it's important too. We're going to talk about the factors that affect home values, the home buying process. I'm going to try to just make it as fast as I can, and you guys can ask your questions afterwards. The buying costs, like so, what kind of costs on top of your down payment that your buyers need to think of or buyers need to think of. And then we're going to also talk about how to get financing with Jerome. So Jerome's going to go into more details on the financing side. So first things first, guys, understanding the market. We kind of have when you're looking at the market, you have to look at it from a micro and a macro. So macro start first. You've got to start big. We look at the Greater Toronto Area as a whole, which of course includes Durham, York Region, Peel Region, you know, Brampton, Oakville, all the different areas. We kind of look at it as a whole, and then we kind of dive into the specific regions. So this says how do markets behave during times of change? And we're currently we're in that market right now. Our goal is to help clarify what's going on by reviewing both the macro and the micro markets. First things first is let's look at how the real estate in the GTA over the last 45 years. So I pulled 1980 to 2025 up to last year, and you could see the market has been all over the place. Here this and back in the late 80s into 90s, you could see they went through a massive boom selling. Prices were jumping by 10% every single year, some years even higher. And it got to a point where you could see the price change topped out in really 1990, 1987, 1990. It's in between 1987 and 1990. And then it just plummeted. You can see we went through a recession. Those that are on the call that they can remember what was going on during this time. It was a rough time to say the least in the real estate market. That recession and that bust, I guess you could say, lasted for several years, and we kind of just stayed on steady up until 2010. And then that's when the market kind of took a little bit of a dip and started to just jump again. Now, it's funny, even with all the ups and downs, you can see the average change in price is around 6.73%. So on average, over the last 45 years, you can see an average change of about 6.73%, which is a great sign. It just shows that yes, we are going to have ups and downs in real estate, but it's going to continue to go up. Whoever bought during this time, they're laughing in 2025, right? So I love this chart. It's kind of like it shows the last 45 years and gives you a good idea of what's going on right now. As you can see here, we're in a down market. And after one thing to notice, after every bust, I guess you could say, there's a jump back. Like the market kind of jumps right back, and that happened here, dropped, and then it came back up, dropped, and then it started to come back up. So we're in obviously a drop. We're in what people will call a lower market, a decrease in average price, which is what it is. But it's kind of an opportunity for first time buyers 100% to get not just first time buyers, but buyers as a whole to do something. This is the market that you do it. This is the market when you see prices low like this. This is when you actually act in that type of market. So this is another chart. I hope I'm not boring you guys, but this is another chart that shows average price versus the Bank of Canada over the Bank of Canada interest rate essentially. So what I
Mm,
like to show, which is very interesting, you can see the red is actually the average price and the blue is the Bank of Canada interest rate. Look at when the prices were high. This is back in February 2022. So this is like we kind of went through a crazy peak in COVID. It started in COVID and it just kept going. It was insane. And February 2022 is where we peaked. So that's where we were at the highest point. That's when your average price was at the highest point, as you guys can see over the last few years. And right around that time, literally the next month, March 2022, the government said, "Hey, you know what? We need to control inflation." During this time, inflation was just going crazy. It increased significantly. They're like, "We need to control inflation." So you can see where the interest rates were. They're pretty much zero. They started increasing right as of March and massive jumps. And when that happens, a rule of thumb, when interest rates go up, prices usually tend to go down. And then the vice versa, when interest rates go low, as you can see here, prices usually go up. So you can see the difference. You could right when they started increasing interest rates, that's when prices start to drop. So yeah, that's so you can see here, and then during the steady time when they kept interest rates high, you can see this is considered kind of steady. The market was somewhat stable. There's some months that were lower, some months that were higher, but for the most part, it's been stable, and we're kind of in that range right now. They dropped interest rates. We still have a lot going on with the war and with tariffs. So I think buyer confidence is affected by that. But you can see, I mean, this is a perfect time. Interest rates are kind of tied with a decent average price. Look where the prices were back in 2022. Look where they are now.
mhm.
So yeah, something to think about. And this a lot of numbers. I just want to show you the average price here. You can see last year was 1,090,000. Now it's 1,017,000. So we're down by 6.7%. Versus last year. So that's something to look at when it comes to okay, is this a good time? Is this a good time to buy? It definitely is. So give me a second here. Now, sorry, I want to just touch on this. That was a macro. That was looking at GTA as a whole. Now I want to kind of dive into the specific markets. You could come on. Yeah, sure, come on in. There's some people here that are showing up because we weren't able to get to everybody. We tried to, so there's some people. I stayed in the office to make sure that we're able to get the. Yeah, come on in. Tell them to come in. How you doing, man? I'm good. I'm good. Come on in, guys. We turned
I
into
should have
a
showed up.
webinar.
Sorry, Tristan. I didn't think
What?
they were coming into the office.
No,
No
no, no
working.
worries. You guys come and sit down. Sorry, we turned it into a webinar. Oh my gosh. What's your name? I think I sent you an email. It should be in your email. Yeah. But yes, sorry about that. Okay, so let's get into it. So I'm just talking about the macro, sorry, the macro markets, looking at the GTA, and now we're going to dive into the specific areas. So this is kind of like the GTA, and you guys can't really see. You guys want to sit? You guys can sit over here. We're moving on
You're
the
gonna
fly,
present with
guys.
you.
We're moving on the fly. We're gonna make it work. Yeah, that's perfect. That works. That works. So you guys can see my screen. We're gonna make everything work, guys. So the GTA market. This is, as I said, what I showed you. The average price right now in the GTA is just over $1 million. So you can see here the difference between this year and last year is about 6.7%. So we're down 6.7% in the GTA as a whole. That's one thing that you want to take a look at. You also want to look at the condo market. Condo market is down 9% compared to last year. 9%. Now I know some people are like, should I do condos? I don't think I should do it. If you're looking to keep the condo long term, so I'm saying at least 6, 7, 8, maybe even 9, 10 years, you can
Mhm.
get a great price for a condo right now, and know that you're getting the best price you're gonna see in years. Like the price is down 9%, $620,000 for an average condo is amazing. Just like back in 2023, you can see here it was that same condo or that same average condo was around 700,000. So this is a great time to buy. You can't flip it like Jerome before. People were flipping homes
Oh
Flipping
man, I remember.
condos, within a couple of years, they're selling it for 200, $100,000. That's gone. That's not the case.
Hmm.
If you're looking to buy a good product, you can get a condo 2 bedroom in Toronto for $500,000 right now. This is just showing the average, but you can do that
Hmm.
for like $500,000 in today's market. So don't sleep on condos. But yeah, that's the average price in the GTA. Specifically, now we're going to look at the micro area. So in Toronto, the Toronto average price is pretty much the same as the GTA. So just around literally $1,000 difference. And you can see where it was 3 years ago was 1,054,000. Average condo market for Toronto is average condo price is around $648,000, so 650. Now we're going to get into specific regions. Now you have Mississauga. Mississauga is not cheap. 959 compared to Toronto, it's lower. But $959,000 is just over that is for the average price in Mississauga. And the average condo right now in Mississauga is around $527,000. Again, condos that's down 7%, almost 8% compared to the previous year. And the same thing with condos. Condos are down almost 10%. Brampton average price $887,000. I know some people have things to say about Brampton, but the average price is amazing for people that's looking to get into the market. You have 887,000 compared to $1 million plus in Toronto. Look at the average price for condos, $433,000. That was unheard of, Jerome. You couldn't do this before.
Right.
$433,000 was not possible. You can see back in 2023, it was 565,000. So more than 100 grand less for a condo right now. As I said, if you're looking long term, it's a great purchase. Oakville is just ridiculous. If you live in Oakville, I mean, if you're trying to buy right now, it's rough because look at the average price. Average price is 1.3 million, over 1.3 million dollars, almost 1.3 and a half, which is just wild. But that's just what it is. Oakville is expensive, but it's still down 6.2%. Average price for a condo in Oakville is 718,000, and again, that was coming down from 811, or that came down from $811,000 just last year. York region is expensive too. York region is $1.14 million. Like it's up there, but it is down, as I said, 7%. Condos are around $605,000 in York region. Durham region is the cheapest one. So if you're from Durham,
Hmm.
I'm also from Durham. You can get great deals. Durham region is still pushing like properties right now galore. Like you're still there.
Yep.
It's not as crazy as 2022, but it's still moving because of the price. Look at the average price compared to, for example, Oakville. It's $835,000. Now that's average.
Yep.
So you can get something that's lower, a lot lower.
I was gonna say that. I was gonna
Yeah,
say
this is
everyone's talking
sorry,
average. You can get $400,000 condos, right? There's still those.
100%. Yeah,
Yeah.
guys, even with Oakville in those areas, that's the average. So that's taking into
Hmm.
account the highest prices and the lowest prices. You can definitely get something lower than 835,000 in Durham.
Hmm.
453,000 is the average sale price for a condo. And there's building a lot if people know if you know about Durham, Pickering has a lot of condos that are going up right now. Look at the average price, $453,000, down compared to 2023, which was 560,000. So Durham, I think it's a great market. Like if you're looking to get into the market, Durham region is definitely that, and Brampton. Those are your top two, I would say, for the average price being a lot lower. This one, I want to show you the difference between what the average price for the GTA is, 1,017,000 compared to 2021. You can see here. Look at 2022. Can you guys see 2022? Can you see my mouse when I do this?
Yep.
Yeah. So 2022. Look at the average price of a GTA home, $1.3 million compared to 1,017,000 now. If this is not a good market to sell in, or sorry, to buy, not to sell, to sell it, to buy in, I don't know what else, to be honest. So that's the market. I want to talk about quickly the factors that affect home values. So these are the kind of the 7 things that affect a home value or the values of a home. So first is population. The more population, if the population is growing, that means more demand. So population growth, we 100% watch this to see how this is affecting real estate values. We look at economic conditions right now. With oil, crazy prices for oil and all the situations that are happening with tariffs, it's affecting our market and our economy in Canada. jobs, all that stuff affects how real estate values are affected, right? Like, and how real estate values are going to go up or down. Ownership affordability. This is big. For the longest time, you couldn't, people felt like it, and it still feels that way right now, to be honest with you. Like, you can't afford a home. It still kind of feels that way with interest rates. So, home affordability, that ties into interest rates. It ties into what are prices like right now for a house. So, that's something that we definitely watch to see what the values are. Investor activity. Are investors active? Investors affect a lot. Right now, you can see the condos, and right now, investors are not buying them. They're trying to sell them, and it's completely affecting the condo market, especially in Toronto. There's a lot of investors that are actually listing their condos to sell them, which is causing a lot of inventory, which is causing prices to come down. So we watch ownership. I mean, we watch investor activity. Replacement costs. Are they charging too, like, in terms of levies and different costs that the government charges? Maybe they want development charges. We will look at replacement costs in order for that, like when it comes to real estate values. Housing supply. Do we have a lot of inventory? Do we have less inventory? Right now, we have a lot of inventory, especially for condos. So, that's going to affect things. If we have a lot of inventory, it's just simply, supply and demand. If we have a lot of inventory and not enough demand, prices drop. If we have a lot of demand and not a lot of inventory, prices go up. So that's kind of how it works. And then consumer confidence and housing regulations. How do consumers feel about the real estate market right now? Right now, it's not the best. People don't feel like they can afford a home. Sellers feel like if they put their house on, they can't get as much as they could have, may have gotten, 2, 3 years ago. And that's just the reality of the market right now. So, no worries. So those are the 7 things that we look at when it comes to the factors of real estate values. Next up, I want to talk about is, and I hope I'm not going too fast for you guys. Am I good? Good to go? Everybody's
Yep.
following along, okay?
Yep.
Awesome.
Yep. Yep.
Okay, so now we're going to get into the home buying process. What does the home buying process look like? And this is kind of like going to give you guys a quick rundown of what that will look like once you say, hey, you know what, I'm interested in buying a home. Okay, so let's talk about that. First things first is what we look at. Okay, well, how does the buyer want to be represented? You have buyer representation and you have a client or self-represented party. As a buyer, if you're under buyer representation, which is signing an agreement, as a buyer, you have the same rights as sellers to hire professionals who will look out for you and represent your interests. So we'll look at your fiduciary. We have a fiduciary responsibility to you to ensure that we look over or look after your best interests at all times. So to do so, you have to sign a buyer representation agreement. Usually that's about 3 months or so. Sometimes it could be longer, and you just kind of renew with the sales representative of your choice. So you choose a realtor, hopefully it's me, and you sign a buyer rep. The other side of things is if you decide not to go with a buyer rep and sign that, you can go as a client or self-represented party, and as things are very different. The obligations of your sales representative depends on the specific agreement you sign. And I'm going to go into the details of that, what that will look like. As a client that signed a buyer rep, the sales representative will provide advice and full disclosure of all information. The sales representatives, which is the realtor, the real estate agent, is obligated to act in accordance with all of your lawful requests, and all information is kept strictly private and confidential. That's our job. These are our fiduciary responsibilities by law for us to withhold to keep up. If you're looking at as a self-represented party, the sales representative, so the realtor, will not look after your best interests, will not decide what terms to include in an agreement or purchase and sale, will not determine how much you are willing to offer or accept, will not encourage you to rely on their knowledge, skill, or judgment, and will not prepare any documents. So most of when you're reading this, you're like, okay, well, I might as well just go with being represented. It only makes sense. By a rep, you sign the agreement. And that's the way to go. Obviously, people have the options, and that's why I'm presenting both to you. First things first. So let's say you decide to sign your buyer rep. You got to choose a realtor that you're comfortable with, somebody that you feel that, you know what, I can go shopping with this person. I trust their knowledge. I trust their experience. I trust that they're going to give me, the right information at the right time. They're not going to force me to do anything. They're not commission hungry. Those are very, very, very important things. So I imagine that, the person that you choose, you feel comfortable with that person, and you're able to go through this whole process because the biggest transaction usually for most people of their life, right, is buying a home. So you really want to make sure that you feel comfortable with that person, that sales rep, which is the realtor that you're working with. And I'm hoping that I'm going to put my hand up there for for myself, Jerome. Um, Next up is once you get a realtor, you have to understand your financing options. So this is where a mortgage broker like Jerome comes into play, and we're going to talk more about what he does and how he can set you up to for your financing, because they're going to set you up to get pre-approved, which is super important. Like to start this process, you got to know what your numbers are. You got to know how much you can afford. He will go through the whole process with you, which he's going to do in just a second as well. But that's the second step. So first step is finding a realtor. Second step is understanding your financing options, which is speaking to a mortgage broker. And then it's time to go shopping, because Jerome would have given you guys your pre-approval. You guys will
Mhm.
know exactly how much you can afford. You will have an idea of, what your numbers are, so that we can go now and go shopping. And when we go shopping, you got to keep in mind that you have to keep an open mind. You're not buying your forever home today. That's not how this works. You're buying a home that you can afford. So you want to make sure that if you can't afford that house, always wanted a house, so you got to keep in mind, hey, maybe it's condos that I can, or maybe condo townhomes or townhomes. So just keep an open mind. This is not your forever home. This is just a home that will get you started. Uh, don't be fooled by first impressions. There's going to be houses when you're walking through them that are staged and they look pretty, but hey, I mean, you got to see through that. And sometimes, no, not sometimes, most of the time, I do two visits, especially if there's a home that a client's interested in. We do two visits to make sure that, hey, you know what, this is the house that I'm actually interested in. The second visit, I can actually see through the furniture. I can see through all the staging and see the house for what it is. So don't be fooled by first impressions. Location is crucial. Know that obviously certain areas are going to cost more. The $700,000 house that you can get in, or not, it won't be a house. Let's say $1 million home that you can get in Toronto can stretch. You can buy like a mansion in Whitby, for example. I'm just giving an example, but like location is key. The further it kind of works, that the further you get away from Toronto, the more money you get, more bang for your buck. So the more your dollar stretches, the further you get from Toronto. When you get close to Toronto, you're gonna pay. It's just what it is. You're gonna pay a
Mhm.
premium. That's just yeah. So location is crucial. I would definitely consider, where do I go to school? Where do I go to work? Where are my kids going to go to school? All these things matter when it comes to location. And when you're viewing properties, know that, you're going to have to be respectful. Take your shoes off. This says, don't bring children, but I encourage you to bring your kids, as long as they're not too we say rambunctious. As long as they're not, too crazy. If they are, then please keep them at home. But if they can, sit through it and walk through a house, and definitely bring your kids. We obviously no smoking. Take your shoes off. Be respectful. Treat the house like it's your house, right? So if you wouldn't do those things in your home, then obviously you don't do that in the home that you're viewing. So those are some things that to consider. Next up, let's say you see a house. We've seen a bunch of homes. Some houses you may have walked in and be like, yeah, no, this is not it. And walk out. Done that multiple times with clients, even a buyer that's on the line right now. She knows all about that. We can laugh about it. But let's say you want to put an offer in now. You see the house, it's perfect. We've seen it twice. Maybe, you feel like this is it. The process of putting an offer in is, especially if it's a single offer, and I say single offer versus multiple. What that means is there's situations where a house is very, very hot, and maybe they just listed it right below market value to get as many people in there as possible. So let's say, that they listed at 700,000 and the house is really worth 750, so they got a lot of traffic. It might not just be you that's offering, it might be somebody else that's offering on the home as well. But for all the offers, the way it's structured is we look at price first. So the purchase price, how much are we going to offer this home? And when we look at that, we're looking at, okay, well, what are the comparables look like in the area? How much are homes selling that look like this house within the last 60 or 90 days? And the closer we can get, like if you can find a comparable house that looks like it that sold recently, that's the one that you kind of want to lean on. But that's how we figure out what the price is. We go based on what's sold, what's currently on the market. Once we figure out what that is, we put in our purchase price. Next up is closing date. What closing date works for you? What closing date works for the seller? if you're flexible, then you kind of want to give the seller their closing date because that's just one less thing that they're going to look at, So
Mhm.
now they're just going to be looking at, for example, price. So, depending on your situation, maybe you're renting and you have to give 60-day notice. We look at your closing date, and that's super important, of course. And the closing date just means when you're going to get keys. So when you're going to get the keys in your hand, when are you taking possession of the home? Next up is deposit. So deposit is usually 5%, and it's the same as it's incorporated with your down payment. So don't think it's like 5% and on top of your down payment. It's with your down payment, but it's pretty much a deposit that you say when they accept your offer that you're saying, hey, I'm going to come in. This is my 5%. I'm acting in good faith to say that I'm going to close on this property. And when you give that 5%, deposit again is it's a portion of the purchase price that you're coming with, and it's also included with your deposit. Like it's a part of your deposit. Sorry, your down payment. So that deposit usually is asked for within 24 hours of an acceptance. If for whatever reason the deal, let's say it's they accept the offer and it's conditional. We're going to talk about conditions, but it's conditional on financing or inspection, and things don't work out on financing or inspection, you get your deposit back. So that's the key. People think that they're going to keep your deposit. No, if you guys decide that you want to walk away and you had the condition to do so, then you get your deposit back. Irrevocability just means that, hey, how much time are we giving the sellers to respond to our offer? So let's say usually we try to do 24 hours. In a hot market, we were doing within a couple hours. In a hot market, we wanted to know right away. And what that is just saying, hey, are you guys going to accept my offer? Are you guys going to decline our offer, or are you going to counter our offer? And usually it's a counter. Usually they're saying, hey, you offered 700, but we're going to counter at 750, for example. And then you play that game back and forth. And then last but not least at all, conditions. Now, conditions just means that, let's say I put an offer on this house. I'm saying that I will buy this home on the condition that I have financing, which makes sure that, my financing clause is in there saying that, hey,
Mhm.
which gives you 5 days, 5 banking days or 5 business days to get all your financing in order. That's when Jerome comes into play. You can make it conditional on things like on inspection, for example, saying that, hey, I want to make sure that this house, which I highly recommend, I want to make sure that this house, that it's solid. You don't want to buy a lemon and now you're stuck with it. So you'll do a full home inspection, which usually costs you around $500 on a home. Again, all these things are conditional. So if for whatever reason they come back and it's not what you want or you're not willing to accept it, then you can get your deposit back. So as long as you have those conditions in, it gives you the flexibility to walk away, which is super important. And that's what this is talking about, like financing status certificate. That's what for condos. What that is just it's a full report on the condo corporation, how they're handling the money, how they're does the person owe maintenance fees? That's the person the sellers that you're buying from. Maybe they haven't paid their maintenance fees. It shows that it shows the whole every aspect of the condo corporation and the building, and it's in its entirety. So that's super important. You want to get that reviewed. Usually that's reviewed by a lawyer, and the lawyer will give you the heads up, say, hey, we're good to go, or hey, you know what, I saw that their financing is not that fund that they collect, the maintenance fees that they collect is not as strong as I would want it. So that can be a flag. But those are the three main conditions: financing clause, which that's what Jerome comes in and makes sure that you can get financing and you can get a mortgage on the home; status certificate, which is mainly for condos; and then home inspection, which is making sure that the house is not going to fall apart. So yeah, that's pretty much the whole process. Um, Buying costs. These are some of the things that you have to keep in mind on top of your down payment. So these are things that you're going to have to use as their closing costs essentially. So you have to have it ready when you close on the home. So lawyer fees, I have 2,000 to 20 grand. I haven't seen 20,000, not even close. It's sometimes even lower than 2 grand. Sometimes I've seen 13 to 1,500 usually. Status certificate, again, that's usually $100. This is normally something that the seller will pay. The seller will usually pay for that and give that and hand that over to you, and then you just give it to your lawyer. CMHC, that Jerome, I guess you could touch on that when you're ready, in regards to what that means and the fee there. Appraisal fee,
Yep.
again, yeah, it's around 300 if you need it. Some lenders don't even need you to do appraisal fee; they'll cover it themselves. Title insurance, same thing. That just makes sure that it's a clear title. That looks for any liens on the property or and maybe they haven't been paying their property taxes. All of that information will be there. Property insurance, of course, when you that's just insurance on your home. Make sure that you have liability coverage if there's a fire. God forbid there's a fire, and you want to make sure you have insurance on the home. Home inspection, as I said, that's around $500. That's a good number to work with. And then whatever mortgage adjustment period, that's all discussed with the lawyer and also with Jerome. So those are your main costs. The one cost that I'm forgetting is the big dog. that's the Ontario and Toronto land transfer tax. So this is the biggest cost when it comes to closing on a home. A rule of thumb to use in your head: take about 1.5 to 2% of whatever the purchase price is. So 1.5 to 2% of whatever the purchase price is, that's what will be normally your closing costs. It can be less, it could be more, but that's a kind of a good range to use. The land transfer tax is just a fee it's the most frustrating fee, but it's a tax that you pay whenever you're exchanging real estate. The government charges it in Ontario. Toronto charges it as well. So right now, if you're outside of Toronto, you only pay the land transfer tax once, which is the provincial tax. But if you're in Toronto, you're technically paying it twice. So that's something to keep in mind. If you're looking at Toronto, you're going to almost pay double in this cost. But the good thing is, if you're a first-time buyer, you do get rebates. I have an example here, as you can see. Let's say you bought a home for $700,000. And you're outside of Toronto, because this doubles. If you're in Toronto, this doubles, by the way. But if you're outside of Toronto, then it's $10,475 without the first time buyer. So this is for all the people that have already used this rebate, and they don't have it anymore because it's only a one-time rebate. And versus, you can see here on the other side, that person's paying $10,475. Versus if you are a first time buyer, the government will give you a rebate, and you're only paying $6,475. So you get about $4,000 off from the government. That's usually a rebate that you work with through the lawyers. The lawyers will get that rebate to you. So that's something to keep in mind. It is the biggest cost. You probably wonder how agents get paid. When you're buying a home, usually 9 times, probably even more times out of 10, we're getting paid by the seller. So the seller usually will pay the commission for the agent. So it's almost like you're getting the agent to work on your behalf, but you're not paying the agent. The agent's being paid by the seller normally. So that's a rule of thumb to keep in mind. When you're selling, the biggest cost is not land transfer tax, because you don't have to pay that when you're selling. It's only when you're buying. The biggest cost when you're selling is commission. You're now paying commissions for the seller agent, and you're paying commissions for the buyer agent. So it's something to keep in mind. Yeah. Yeah. So that's the process, guys. Now we can get into Jerome.
Well
I hope
done.
you guys, if you do have any other questions, of course, please save it for once Jerome is done, because we want to value you guys your time. But that is the process for buying a home, and Jerome's going to talk to you guys about the money. So let's do it.
Perfect. Am I going to take this over, or you're going to click for me?
If you know what, let me see if I was to switch. I don't want to struggle again
If
with.
it's,
You know what?
yeah,
I'll
if it's
click.
easier.
Yeah, you know what? I'll click. Just tell me when.
Okay. Not yet. No, I'm just fine. So thank you guys all for coming. Honestly, I'm very excited just to have this presentation, just even to work with Tristian. He's really one of the best realtors that I have worked with. I made a joke with him today because I called him earlier and I said, I know you only answered my call today because we have this presentation. Normally he's on the phone with clients 24/7. So I'm happy to be here. Apologize that it is not in person. But I wanted to start by saying this is actually one of my selling points for people who come to me as against going to the bank. Don't you want to just do this from the comfort of your own home? Because if you want a mortgage with me, we can just sit, we can Zoom, we can call, and we can get this done completely virtually. It's a lot easier. Grab your popcorn. Same thing for today. So hopefully that's easier. And I apologize for those of you who did show up. Hopefully Tristian will take care of you guys
I got you
after
guys.
as well. Yeah, you get the premium experience with Tristian over
Yeah.
there. Okay, perfect. So this is what we're going to be covering today. We'll go through this stuff. Yeah, next one. Exactly. This is what we're covering. First of all, a little bit about myself. My name is Jerome St. Bernard. I work for a company called Vine Group. We are a nationally recognized mortgage company. That means we can do mortgages all across Canada. I've done Calgary. I've done Alberta, Vancouver. Of course, today our focus is going to be in the Toronto, Ontario market. I've been doing this for about 8 to 9 years, so not as much experience as Tristan. I was actually laughing when I was looking at the charts because you've kind of seen the whole up and down. Since I started, I've really only seen the up and now it's coming down. So it's been a seller's market forever and now it's a buyer's market. So I'm screaming off the rooftops for people that, if you've been waiting, and it's funny because a lot of the people closest to me that they're like, I'm waiting for it to go down, waiting for it to go down. I'm like, it's down now, and they're still waiting, but you can't time the market. We're going to talk about that a little bit later. So I'm going to start with this, the very basics in how you get a mortgage, what the process looks like, and what the bank is going to look for when you come to them. These are the things that I help prepare you for to try to make you put your best foot forward, qualify for as much as you can. First thing is going to be your income. Bank wants to know how much you make as a person or as a household if you are doing this with someone else, and then how you're paid, right? So they want to know if you are a teacher or a government employee. Those are some of our favorites because it's set. They know exactly what you're making every 2 weeks. It's easy to predict. Then we have also people that maybe work overtime, or if you are in sales and you have a commission. So those are variable types of income, and we have to present them in certain ways. Just quickly, if you guys were curious and you do work an hourly rate, they're going to look at the average of your last 2 years T4s, especially if you were, let's say, for example, a nurse. A lot of times they'll work a lot of overtime. So my job is really to look at how you're paid and how can we best use this with the lender to get you, of course, qualified. Next thing we're going to look at as a part of our strategy is what is your debt load? How much debt do you have? And I always tell people to try to work with me a year, even 2 years ahead of getting into your house so we can kind of strategize. A lot of people say that down payment is the hardest part. And as they're kind of saving for their down payment, they're looking at their debts, trying to figure out, should I pay off this debt or should I keep it for the down payment? I always tell them to stop there, send it over. Some debts will affect your application more than others. So I might say, you know what, we're going to keep this down payment here and leave that debt alone. Or I might say this debt over here is affecting me too much. Let's pay that off, even if it's taking 50 from the down payment, putting it onto this debt, and they can affect your numbers differently. So it is important the order you do things, and I like to get in there early, just to make sure that everything lines up. Next up is your credit. So credit is super important. Of course, they want to know how credit worthy you are. They're going to be giving you this large loan, and it depends or it determines what type of loan I can get you. The credit scores that they want to see is above 620. Some banks are 650. So again, this is why working with a broker matters, because some banks would just say no. Some banks it's okay. Some banks we can get through with a good story if they can see your credit is on the rebound. If your credit score is below 600, we will have to put you with a B lender. So I'm not going to turn you away. We can still find you financing. It's just a little bit more expensive. And it does take a little bit larger of a down payment. So I mean, a lot of you here are Tristan's clients, so I'm just going to assume top credit because he always sends me really great people.
That's
Um,
not true, but yes.
well,
No, they're
they
all
end
great
up being
people. They're
great.
all great people. They're all great people. But of course, there's things. I mean, there's situations where people, and I mean, life, right, in terms of your credit. So,
Yes.
yeah.
And some of them are complicated, but we always figure it out. Before I forget, I saw in your presentation one of the couples that we worked with recently, and a lot of the clients you sent me are just young building families. They're such great people, but they just don't know what can be done. Some of them are let's thinking about building a family, and one of the questions that they had was, I'm planning a family, or I want to go on maternity leave. My income's going to go down. So just wanted to, before I forget, say if you are looking to have a family or start a family and you're concerned about maternity leave, you can actually use your full income. And this is, I guess it works with income as long as you have a return to work date. That's something that was stopping people from looking, and we kind of got past that objection. Also, where the funds can come from. If you are lucky enough to have Bank of Mom or Bank of Dad, you can get a gifted funds as long as it's immediate family. As you were talking, I was remembering their file, and I'm like, let me mention that before I keep going. Okay, so credit, if your credit's above 650, we can get you with the A lenders. I work with 50 different banks, Scotiabank, TD, BMO. We also have credit unions. We also have monoline lenders, which are smaller banks, but sometimes they have better specials. And I kind of usually give you guys both options. Some people just feel safer with the banks that they know, but for the most part, these are lenders that I work with very often. And as long as things are fairly the same, it's kind of like groceries. I'm like, which lender has the best special this week? As long as it can, qualify you, and I'm going to put you there. When you come to me, I'm going to have a quick talk with you about what you're looking for, where you're interested in are looking, and kind of what you're trying to get into. And I'm always going to do a pre-approval for you at the max, because I just want you to know that if I say you're qualified for 700 or 800, you can get anything under it. But that doesn't necessarily mean you have to go to the max. And I got to tell people that, right? If I qualify you for 800 and you find something at 600 that works, get the thing at 600. Don't be house poor at the top. That's one of the pieces of advice that I want to give people. Don't be house poor. You want to buy a house that you're comfortable in and still be able to do things. So one of the things we're going to be looking at is exactly how much your monthly payments will be. We can make a budget. If you know your budget already, even better. But make sure that you're comfortable in the purchase that you make. And also remember that we're in a buyer's market. So maybe instead of using that, the top of the budget that I give you, you can talk to this amazing negotiator we have here, Tristian, on your behalf, and he can just cut that price down for you, because this is the time to try to get people to bring their price down. Um, Next
And I
up.
just want to touch on that. So buyer's market, so people
Mhm.
understand, buyer's market just means that we have a lot more inventory than we have buyers looking. So we have
Mhm.
a lot of supply and less demand. In a seller's market, we have a lot of demand and not enough inventory, so not enough homes to sell to them. So that's kind of how to differentiate between the two. So yes, we are definitely in a buyer's market. We have a lot more inventory than we have buyers looking. So, and which is a
Yep.
benefit. That's a benefit to buyers, because if you're in a buyer's market,
Yep.
that means prices come down, and that's what we've been seeing over the last couple of years.
And then on that chart that Tristan was showing you, where we're going up and up and up, and it's a seller's market, usually you'll see an asking price. And it's very annoying because sometimes they won't even put it near what they want, because they're expecting you to start bidding at that number. In a buyer's market, they might even take asking. You don't know what they're going with. Maybe they said, this is the price I want. That's the price they're going to take. So you can always, do a little research. Tristan will tell you, can look at how many days something's been on the market, but you might be getting the actual price tag, which is a lot, I think, more transparent of a market than a seller's market. Um, that's all.
So,
Okay. Down payment. So I saved this down payment for last. This is one of the fundamental things that you need to save for. And the way to calculate this is the minimum down payment you would able to put as long as you can qualify for it. So I do have to say you still have to qualify for this amount. If you have a home up to 500,000, 5%. So if let's say it's exactly 500,000, that's going to be a $25,000 minimum down payment. And then from there up to a million, which was recently increased to 1.5 million, it's an additional 10%. So, excuse me, I'm going to try my best to do some quick math with you here. So let's say um, now you're seeing the prices, and you're a first time home buyer, but you want to buy your forever home, and you're like, I'm going to go get something for 1.1 mil. This is such a huge change, and you can tell the government's actually trying to get people to into the market. Previously, anything a million or over, 20% is required. So 1.1, that's going to be 200,000 to 220,000 you would need. Now, using this new calculation, up to 500,000, that's 25,000. The next 600,000 from 500 to the 1.1, it's going to be 10%, 60,000. 60,000 plus 25,000, you can get into a 1.1 million house for a minimum down payment of 85,000.
big difference.
Um, Big difference. And funny enough, a lot of people that have been waiting on the sidelines, I've noticed their incomes are getting higher, but maybe they haven't been able to save that 200,000 because their expenses are high as well. This is an opportunity for them. That 1.1 house comes down, you can put the minimum down payment using your high income, we can get you in there. So these are the type of calculations that we're making for you. Mm. Next up, rates. And again, I was learning from Tristan's presentation earlier. I love how he put the prices versus the rates, because it really kind of showed me why we're talking about this being such an opportunity right now, because we've seen the prices are coming down, but at the same time, the rates are reasonable. Not to say they're the lowest they've ever been, but they're a reasonable rate. And especially compared to what the prices are, this is when you get in. There's two different types, fixed versus variable. Fixed and variable, these are the two main types. Tristan, I was supposed to do this in person, so I'm just gonna give you one question. What's better, fixed or variable?
It depends.
Ah, okay, you've been here before. One of my least favorite answers, but 100%. It depends on you as a person. If you were to ask me today, I would probably push for the variable. That's based on what we're seeing in the economy. If we think there's room for it to go down, of course, we want our clients' rates to go downwards. We're constantly looking at things. I'm sending out newsletters based on what's happening in the market. But if you can't sleep at night because you don't know if the rate's going to go up, down, the same, and you're constantly refreshing your page and looking at the news, and it cause you any stress, then just go with the fixed, right? It's really about your risk tolerance and what will help you sleep at night. So that's how I would determine whether you're going to get a fixed rate or a variable rate, whether you want to play the game. But also, there are a few other reasons why you might choose a variable rate over a fixed, and that is flexibility. So let's say you buy a house now and you have plans to maybe move before that 5-year term is done, or you see the value start coming up again, you want to refinance and take some of the equity out, or you just have to move for whatever reason, you have to break that mortgage. The penalties on a variable mortgage are going to be 3 months interest. So it's much easier to pay that. That could be a couple thousand. If you have a fixed mortgage, it's going to be in the 20,000 range to try to cancel that right away. So based on that, even if someone's about to buy a house and they think they might have a job opportunity coming, they'll say, just go variable, right? You can write it out, but now you're not going to have that crazy penalty. Also, the variable gives you the option to lock into fixed. So maybe you think that fixed is the better option, but you have space to go down. This is a conversation we'll have. You can say, get a variable. We think rates are going to go down in the next 6 months. We'll talk about it over time. If rates do go down, you can call your bank and say, hey, I'm ready to lock into fixed. So just if you like to play the game, I would love to play the game with you. If you just want to set and forget it, you have a set budget, go with the fixed, forget about it till 5 years down the line. Okay, biggest mistakes to avoid in 2026. Put this over here. Biggest mistakes. Okay, so the first one is going to be waiving financing without certainty. So again, Tristian already went over this. Amazing. There are certain conditions when you make an offer. He's going to talk to you about the price, the closing date, inspection clause, and then the condition of finance. So condition of finance is mine. Inspection is also very important. I'll give you a quick funny story. There was one client who, and this is again in a seller's market where your realtor might say, hey, I want to make this competitive, waive this or waive that. And they told him to waive your inspection clause. I don't think Tristian would do this. And he did. And it was wintertime. Summer came along and they turned the AC on just to notice. Look inside, the AC unit was gone. The client had taken it with them, right? Something like that would have never happened had you had the inspection clause. I feel that the condition of finance is just as important, right? So the condition of finance, right? It is protecting your deposit because things can change with the lender. Even if you're pre-approved, maybe their policy's closed. Maybe we use the program to qualify you that they no longer have. Maybe they don't. Maybe they just don't like that property or that area. These are all things that we can check or double check during a condition of finance. How this would work is you give them your deposit, show them you're serious with the offer. Tristian gets the APS, the purchase of sale, sends it to me with a 5-day condition of finance. That means I have 5 days to now go back to the lender, say, here's my client. We've already been pre-approved. I want you to double check everything and give us the 100% certainty that you are ready to give this person financing. Once we get that, we know we're good to go. He can go back and say, we're waiving that clause. Everything is good to go. So it's just an extra piece of security. And I saw so many people waiving this when it was a seller's market. We don't have to do that anymore. We can take our time. We can put the inspection clause, we can put the finance clause, and just make sure that we are fully protected because we have the power in this market. Next up is trying to time the market. And I was talked earlier, I have a lot of friends that are guilty of this. And that's not a great strategy in any market. If anyone trades stocks, if anyone watches Bitcoin, trying to catch or call the bottom is a fool's errand, right? So a lot of times people will wait and wait and wait. And when they think it's the bottom, it's too late. It's already on the way back up. We've already seen, and we've shown you with the stats, prices are down. Even some investors might not be great for some investors right now because properties that they're in aren't as worth as much as they were before. But that screams opportunity for first-time home buyers. You can get in before it gets back to where it should be. Next up, understanding the true cost of closing. Tristian hit this right on the head. you have your down payment. A lot of people are focused on, I need 50,000 and they're budgeting, they're budgeting, they're budgeting. They get there, they're like ready to buy, but they didn't consider closing costs. And that's the main one is going to be your land transfer tax, the lawyer fees, or title search. I usually tell people to have at least 2% of the purchase price there, just waiting just in case. Usually it's just under that. So that's something to consider. And then the last one, which is, I think one of the priorities that I want to talk to, is overvaluing independence at the expense of opportunity. So what does this mean? This is about asking or using family for help if that is available to you. Because the truth is, it's not available to everyone, but there's a lot of people that have those options that don't want to take them, either because they don't want to have an awkward conversation, they want to prove that they're independent, or they just, they've done well, they came out of school, they have a good job, they're making, 60,000, 70,000, and in their head, I have a good job, I should be able to buy a house. Um, and that should be the case, but Toronto is a pretty expensive market. And because of that, the government has added a stress test. So just to quickly explain the stress test basically says, or an application, a mortgage application basically is looking at all the money that goes into your account every month versus how much is coming out. So they're saying if you get a new house, your mortgage payment is going to equal to 2,000. Can you afford it based on your expenses? The government said we want to be conservative. We're going to give you a buffer. Instead of using that 2,000 number, they're going to use 3,000 or 3,500. That's what makes it so hard to afford things by yourself in Canada because the government's giving you this buffer. Not to say that you can't afford something. Um, so let's say you have a job and you're making $50,000. Or a quick rule of thumb is I can get you qualified, assuming no debts, for about 5 times that. So you come to me and you say I have 50,000 down payment and I make 50,000. Times that by 5, you can get a mortgage of 250. Add that down payment, now you're at 300,000. That's what you can afford. And this is pretty close to the real math once I look at everything. Um, if there's two of you, now that 50,000 becomes 100,000. Now you can get 500,000 plus that down payment of 550. Tristan, what's the difference in a property you can get for 300,000 versus 550?
Getting a parking spot, or or actually getting a condo.
Facts.
No, it's prices have come. I mean, you might be able to find something in the GTA for 300,000, but it's a lot harder.
Yep.
I say, but 500 is 100% doable. You can do even
Right.
400s. Like you guys saw the average condo right now in Brampton in certain
Hmm.
areas at 400,000. So definitely doable.
Yeah, and that's why I think it's so important to consider. So again, I mean, if there's a couple and you guys are both making the 50, that's fine. But if you want to get in now while the prices are low and you're avoiding having that conversation, I would say have the conversation because what you're gonna do now, let's say you're 50 and you say, Mom, can you co-sign, or dad or your cousin or just anyone who you guys have a good relationship, a good enough relationship where you guys trust each other. Because if you wait for your income to go up, or maybe you're waiting to meet someone so you guys can buy together, the the price of the property is going to go up over time. So why not get in? And then the next thing, I guess we can go to the next slide,
Sure.
um, is how we can actually co-sign, right? Co-signing, there's different ways to do it, but it's become so common policy now that we can start you off. Typically, a mortgage is 5 years. And after that 5 years, maybe let's say you've met someone, you want to add them onto the property. Or let's just say we're hoping your incomes went up. We know the mortgages come down. As soon as you can qualify for that by yourself, we can actually remove that cosigner. And now they're on their own again. You're on your own again. But you got in this house at this time, right? So it does mean once they co-sign that they are equally responsible for the mortgage. So hopefully you're responsible if you're asking someone to co-sign. But I do think it's something that is very helpful in getting you there. And if you think about that math, 5 times the income is what I'm using. So even if you have a someone that's willing to co-sign that makes 20,000, that's an extra 100,000 in mortgage I can get you. If they're willing to help you, maybe you'll help them later in life. Um, I've had these conversations. I've had clients that didn't want to have the conversation alone, so we're calling their parents together and discussing what this means for them, and I'm more than happy to do it. Myself, my first property that I purchased, I needed to use a parent for co-signing. We later took them off, and it helped me start my portfolio. So I'm a huge advocate of this. Next slide.
Awesome.
Okay, so Of course, you have me interested in saying now's the time to get in. The government feels the same way, and they are trying, of course, to give you, incentivize you to be strategic with their finances and use everything that they're giving. So one of the ways to succeed in this market is just anything that they're giving you, take advantage of it. So the first one I'll talk about, the first time home savings account. This one is fairly new, came around in the last couple of years. Similar to RSPs in that if you put money into this account, you get it is tax deductible. So you're lowering your income, you're going to have better tax returns. And I think the max is 8,000 per year. So if you have any money to put in there, I would try to max it out at 8,000 per year. There is a limit of 40,000. If there's two of you, that doubles to 80,000. But this is tax free. And the main difference between this and the home buyers plan, the RSP that they had previously, is you do not have to pay it back. So this is letting you reduce your taxes for the years until you buy your house, and then you don't have to pay it back. It's done after that. In contrast, the RRSP, if you've been paying into this at your job, sometimes it's automatic, sometimes you can add to your RSPs. Whatever you have in there up to 60,000, and they recently increased this. It used to be 35,000 per person. You can take that out and use it for your down payment. The difference is you do have to pay this back. So they give you a year where you don't have to do anything. After that year, you have to start making monthly payments and repay it over a 15-year period. But it's an amazing opportunity to take that money out without paying taxes on it. And it's actually the only time you can touch that money without a penalty or paying taxes on it before you retire. So anyone that has RSPs, I'm always advocating for them to use this for their down payment as well.
And that
And of
doubles
course,
up
you can
when
do a
you
mix.
that doubles up when you have a partner, right? So if it's two
Yeah,
people, you get 80,000 for the FHSA, the first home savings account, and if it's for RSP, it's 120,000 for two people, right? So something to keep in mind.
very significant, very significant. Um, and actually, I don't have a slide on this, but I just wanted to, you just reminded me because it's very important. It used to be that you had to have 20% down to have 30-year amortization to kind of spread that loan out and make your payments lower. Another one of the new changes, I'll add it on here later. You can, even with the minimum down payment of 5% now, you can actually still do that 30-year amortization, lower your monthly payments. So they are giving a lot of incentives to get in the market right now. This next one over here is huge, the GST rebate. This is the one that right now people are screaming on Instagram and TikTok, all the realtors, mortgage agents. Tristian just did a video on it because, of course, he's ahead of the curve. $50,000 that they're giving on new builds. So this can be for pre-construction or new built houses, which normally, as you're buying it, they're going to tax you on it. They're going to give you a rebate of 5%, which is the GST, up to $50,000. So that's huge because I want to say 2 months ago you would have had to pay an extra 50,000. That's such a discount. So we have resale houses that are getting discounted just because of the market. Now they're saying we want to give you a discount on new builds. So if you're one of those, particular people and you don't want to live in a house that's ever been lived in before, maybe you're scared of ghosts. I don't know. I've heard all types of craziness. Get a new home, get the $50,000 rebate, and that is another opportunity. The next part I won't spend too much time on because Tristian went over it, which is the land transfer tax and of course the Toronto land transfer tax. If you're a first-time home buyer, you're going to get 4,000 for one, 44.75 for the other. I'll just quickly talk about the process of that because a lot of people are like, how do I actually get the money? When you go and sit down with your lawyer on signing the day you're getting your keys and they're telling you exactly how much you owe in closing, they're actually going to have it on the statement of adjustment. So you're going to see this is how much I should have paid. They're going to, just like he showed you on the calculator, take away the 4,000. This is how much I owed here. They're going to take it. So you don't actually get the money, but you can see the savings just on your first home. Okay, perfect. So now we're going to talk a little bit on how to win in today's market. Pre-approval, that is the first thing that you're going to do with me. Hopefully before you even think to talk to Tristian, because he's gonna want to know the numbers. Yeah, he'll call me and say, "What are they approved for?" I don't want to show them all these houses if they're not going to get approved. He doesn't want to break any hearts. I wanted to quickly say what pre-approval versus pre-positioning is. They are technically the same. Pre-positioning is something we do at Vine Group because we want to put an emphasis on strategizing. This isn't just a conversation and telling you you're good to go. If you walked into a bank and you had a conversation and you told them what you do for a living or how much you make, and they said you can get this or that, I would be very scared if they didn't ask to see your documents. We've seen horror stories of people having conversations, thinking they were approved and then not being approved. So make sure, even if it's not with me, even if it is with the bank, you are having someone look at your documents. People making mistakes about what they make, how they make it. We want, and at Vine Group, we have an underwriting team that's going to go through and tell you exactly how much you can be approved for. Um, and then next up, I want to talk about the difference between working with a broker like myself versus going into the bank. Um, I'm a huge advocate, and like I said, hopefully you guys would like to work with me. If I'm not, your style, you want to work with someone else, I would still recommend getting a broker and not going to a bank because I think it's such a big difference in terms of strategizing and helping, especially as a first-time home buyer. You need a little bit more hand-holding. So my first point is to shop your mortgage like you shop your home. You don't just say, Tristan, I need home. And he shows you one house. And then you say, what's the best price I can get for this? That's what's happening when you go into TD or Scotia. They only can give you TD or Scotia products or rates. And depending on what you do, depending on your credit score, some banks might not even approve you while others will. So it does make a difference if someone can look around, again, look for specials, catch specials, or even different programs that might help you get more. Like some banks will approve you for more than others if you need that little much to get into the house. Um, and like I said, banks offer no option. And then last but not least is that my services are at no cost to you. We get paid by the lender. So after we're done strategizing, after we get you that commitment, let's say Scotiabank will say, thank you for finding Joe Blow, and they pay us a finder's fee. No cost to you. And I'll work with people 1 to 2 years prior to even getting this. So that's one thing you don't have to worry about paying. Okay, so before you go, Tristan is Instagram and TikTok famous. I'm not there yet, so please add me at Jerome Does Mortgages. I'm going to open it up to questions right now if anyone has for myself, financing questions or anything for Tristan. So but if it's too long or if it's a personal question and we can't answer it here, please shoot me a DM or an email and I will get right back to you with the answer.
That's it, guys. That's the presentation. I hope you guys found it informative. That was the whole point. Not trying to sell you on anything, just trying to give you some information to run with. I'm hoping that you guys actually got some knowledge out of it. Do you have any questions at all? If you do, can I put your hand or just open up your just unmute yourself and ask your question if you do have any. Everybody, how do you feel about the presentation? You guys feel good about it?
Yeah, I just want to say that it was a great presentation. I do have one question in regards to the new builds, like the GST rebate. Is that just for homes or is that for condos as well?
Good question.
I believe it is either condos or new homes. Who am I speaking with?
Shania.
Shania. Okay. I'm gonna get information. I'm gonna shoot you an email after this specifically with what it is, but I do believe it's for any new homes currently.
Yep.
Perfect. Thank you.
Builders are going crazy right now. All the builders are promoting this right now because they just been sitting over the last couple of years, guys.
On inventory.
Yeah, like everybody pretty much stopped buying pre-construction over the past couple of years. So, sorry, one thing I just want to mention is so interesting. We normally, so for pre-construction, I'm glad you brought this up, Shania. For pre-construction, we normally do anywhere from 15 to 18,000 completions, meaning 15 to 18,000 people get keys to pre-construction every single year. That's been the case for however many years, years on years and years. In 2024, we did around, which was a record at the time, we did around 25,000 units. So 25,000 people got keys, which was a record number. In 2025, we did 30,000, which was the new record. If you guys had to guess how many are coming, how many new construction homes are coming to market in 2029? And the way to think about this is everything like those people that get the keys, they would have purchased that property 4 years ago. So 2024, that person bought the condo and got the key, they wrote the, sign on the dotted line back in 2020 or 2021. Same thing for 2025. They bought it in 2020 or 2021, like around that time. So that was when people were buying condos left, right, and center. You remember when condo buildings were selling out in a weekend during that time. In 2029, because right now nobody's buying in 2020, in 2024 or 2025 or this year, it's been crickets. We're only going to have 673 units come to market in 2029.
Crazy.
So remember what I said, 15,000 units normally every single year on average. And in 2029, we're going to have only 673 units. So I mean, I don't know what's going to happen. Obviously, we have a lot of inventory right now, as like right now in the market. But once that gets absorbed, we're not going to have any new completions coming to market in 2029. So everybody's anticipating that. I mean, if the market does, if all the inventory that we have gets absorbed, it's going to be a huge shortage of real estate, of pre-construction real estate coming to market by 2029. So just food for thought for you guys. Yeah. Thanks, Shania, for mentioning that. I'm glad I was able to bring that up.
Yeah, yeah, that was a good question.
Yeah.
So
Anybody else?
definitely condos and houses will get that rebate, and I'm gonna send you some information on it.
Awesome. I hope you guys liked it. This is being recorded. I didn't screw that part up. So I know for some people that came in late, I'm going to try to, no, not trying. I'm going to send this recording to you guys in the next few days so that you guys can have it and go through it. If you guys do have any questions or want to meet with myself or Jerome, please reach out. Like we're here. It could be a quick 30-minute call. It could be a Zoom like this, where we can kind of go through your numbers or just a phone call. And go through the situation and see, how you guys can get in the market. Because it's funny, a lot of the buyers that I work with, they have the conversations now, even though they feel like they're not ready, but literally in a year or so, sometimes even shorter or longer, because they planted the seeds now, they're able to buy their home and start that process. So don't feel like you're bugging me. We can have that conversation, and then obviously Jerome feels the same way.
Yeah, definitely. Thanks, guys.
Awesome, awesome, awesome. Again, if there's any other questions at all, please let me know. If not, I don't even know how to stop my screen share. I'm struggling
Yeah.
here. I'm here struggling. Anyways, we could just close this. Yeah, that's it. That's pretty much it. Of course, are you ready to get started? If you are, please give me a shout. I think you guys all have my information. If not, you can find me on Instagram and on social media, or my phone number 416-909-6115. Again, I'm going to send you the recording. So I hope you guys had a great time. And yeah, any questions, please let us know. Jerome, you're good? Any questions for
I'm
you?
good. I'm good. Thanks for having me.
No problem, guys. Enjoy the rest of your evening and have a great night. We'll talk. See ya.
Right. Thank you.
No problem.
Bye-bye.
Talk to you guys. I just got to figure out how I'm going to close this. We're going to shut the meeting off.